We're going to do a quick video on Salesforce Stock Analysis. We've got a daily chart on here with three moving averages. The green is the 5-day, the red is the 20-day, and the blue is the 200-day moving average. Let's just go back here a little bit and see what's going on with this stock. We see back here in the spring of 21, we had a rally up and a challenge to the 200-day moving average, and it failed, of course, came down here to about the 210 level roughly. 208, rallied again to the 200-day moving average and closed above it and stayed above it. We started our bull market here. We had some respect for the 20-day moving average, not great, but it did stay above the 200, and we steadily marched up here until we got so far away with the 20-day that we had to break back down to it. And that's what you'll see happening with these moving averages. If they follow them fairly decently, then usually they're very reliable to stay long. You can see this followed it very nicely, and it was reliable all the way up to the top of the bull market here. But these little sections here in a bull market are essentially, you're going to get whipsawed on any kind of moving average, especially at a 20-day. So this 20-day was not real helpful on here, but we were above the 200-day moving average, and we were trending up, and that was your key to possibly get long on this stock if everything else told you it was a good idea. So we moved up on this stock. You'll notice through here we had some gaps. We had gaps to the upside here, we had gaps to the downside here. That's always a very dangerous thing and something to always keep an eye on. You'll notice in this huge steep decline here, we had a big gap filling this gap here, and that's what you're going to see repeatedly over and over with gaps, and that is that they get filled. So let's keep an eye on this for more gaps as we move along. We peaked out here roughly November 21 around the $311 level on this stock. We came down, had a huge sell-off right here from about 300 to about 250. That's an enormous sell-off for any stock, and we challenged the 200-day moving average. We got some support on the 200-day, but you can see that the 20-day moving average was now starting to behave as if we're in a serious bear market and was being respected, and in fact it did respect it almost without exception all the way down until it got down to the 180s. So officially here at around the January level, we began our bear market, and we stayed in a bear market all the way up till today. Now we made some lows down here in the low 150s in May, and we've been going sideways since May, and we're still doing that. We're oscillating back and forth around the $175 level, roughly $172, and just trading back and forth. You'll see that the 20-day moving average is essentially worthless, and the 5 days doing what a 5-day normally would be expected to do. But this stock is basically a battle between people trying to decide should they buy a stock that's now down almost 50% from its highs, or is this just a continued liquidation and we're getting ready to move lower? The answer to that, in my opinion, for entertainment purposes only, is we still have to challenge this 200-day moving average before we make that decision. So we have obviously a serious gap here between 76 and 70 today. That's never good, but you'll notice we had a gap over here. So this stock is just habitual gapping here, and I don't like that, but that's the way this stock trades. My guess is you're going to come down here and challenge this low of it looks like 157 in mid-July, and you'll rally back up again. So I suspect you'll get a challenge of the lows and a rally back up to about the 180 level at least. At that point, we should probably be down around 185 on our 200-day moving average, something like that. So we're probably going to get a test of these lows in the what are we going to call them? About the high 150s levels. You'll probably get a test of the high 150s, and then you'll probably get a rally up around mid to later September of the 200-day moving average, which at that time will probably be around the high 180s or 190 level. Once we get that test of the 200-day moving average, then that's going to tell us whether this bear market's over or not. If we get a test of the 200-day moving average, solid closes, some support from the 200-day moving average on a decline to it, and then a continued rally, then obviously we're out of this bear market. If we bounce off this 200-day from the bottom side and continue to move back down into this range, we're still in a solid bear market. So we're going to have to wait probably till the middle to late September to see what's going on with this stock. You can trade this stock in the short run. You can see it's just in a range. I would be very careful because I don't like stocks with that gap, but that's up to you. You can see there's a ton of gapping in here. When you spread this out, there's gaps all through here, and I wouldn't recommend that for myself, but maybe if you have a good stomach, it's something you can make some money on. But again, testing the low 150s, rallying up to 180s, 185, 190. Mid-September is what I see for the stock right now. Again, all in my opinion only and for entertainment purposes only. Let's go down and see what RBAM Research says about it. Let's see if we cover Salesforce. Salesforce. And we do. There's no recommended entry prices today for Salesforce, and that's not necessarily common, but some days we do have a lot of zeros. Zeros means the algorithms did not come up with an entry price today. It doesn't mean it wouldn't be good to buy or sell. It just means it's not coming up on our algorithms today. The way these work, basically, let me go down here and check. Let me go back here real quick. The way these work, they're put out every morning before 7 a.m. We have 1, 5, and 20-day hold periods. These are buy only on this particular sheet, and if we take a look at Tesla today, we have entries for the 1, 5, and the 20-day hold period. You can see we have some zeros again, and again, those mean there's just no entry prices to look at today. These are all for entertainment purposes only. You have to do your own analysis. You should never rely on these for anything other than entertainment. But the way this works is, if you were to buy in the one-day hold column, you buy today, close out the next trading day, worst case at a loss by the end of the next trading day. Same thing with the 5 and the 20. If you buy in the 20-day column, you hold out for, or expect to hold for 20 days, worst case, at which time you close out at a loss if you didn't take a profit sooner. So you always take your profits as soon as you can get them and close out worst case 1, 5, or 20 days at a loss if you don't get a profit. That's basically how these algorithms for the stocks work. They come out 7 a.m. Monday through Friday. You can get them absolutely free, no credit card required, at rbamresearch.com. Just go to rbamresearch.com, sign up. There's a link in the description below. Again, they're absolutely free, no credit card required, and they're published every weekday morning by 7 a.m. We cover 190 stocks, the major forex pairs, BTC for cryptos, and the most liquid futures contracts. If you like this video, please click the like button. If you want to subscribe, please do that. If you have some comments on how to make these videos better, please leave them in the comments section below. We'd love to hear from you. And keep in mind, everything you've seen, including our entry prices, are for entertainment purposes only. It's all opinion. You should never rely on anything you see on here or hear for anything other than entertainment. And you definitely trade at your own risk.